Stop looking at the economy and the stock market in the old way. The way that everyone has been taught is incorrect. I'm going to show you information and how to essentially triangulate where you need to be. In today's video, I'm going to explain it isn't one-sided. This is a three-dimensional view, and so we have to assess it in that very way. Now, I'm going to show you something first that I think is quite contradictory to what you've heard. Let's begin with it. Right here, the recession isn't happening. The ultra wealthy have never been richer and they're still spending like crazy. So that information is very different than some I've shown you previously. In fact, they called it the recession. We saw many different mainstream news articles saying that. Okay, what about this? Here we have it. People right now, not necessarily the rich people, but regular people give up on recession just as it arrives. Don't count out an economic downturn just yet. So it seems to be everybody is starting to say that there is no recession, that there is no economic downturn, and it's not coming. Well, that depends who you ask. And it depends on what data you use to make that determination. You see, when we are presented with a recession indicator, that's only going to be relevant as long as they're going to keep that in line and measure it in the exact same way that they would year over year over year, decade after decade. But things change. Their calculations change. And of course, that isn't a very good way to do it. But the reason why we should still pay attention to it, not completely ignore it, is because the central banks that make their determination on what's happening use that. The businesses who use that for hiring and firing people. And then, of course, the economists who will look at that data and analyze whether or not they should be telling the asset managers and whether they work with them and so on to invest or maybe hold off or maybe sell. You see, so there are impacts that this data, which is quite frankly contrived, is going to have relevance. It may not be real, but still relevant. You get me? So this is where we go. We're going to delve deeper into it. Let me show you here. Austin went from a weird oasis to one of the most expensive cities in the US, and now it's fighting runaway housing prices. And this is a lot of what occurred to many different cities. Austin just happens to be one of them, where people were looking for places to move. What is affordable, that's safe, that has good schools, that the weather maybe is okay. They're trying to balance that all out. They're leaving California. The population of California, 3 years in a row, has declined. There are many reasons for that. You could put that down below in the comments. Why do you think people are leaving California? New York, and I think Illinois, if memory serves correct, all experience population declines. Now, we haven't really heard of that before. This is quite extreme. The prices of the real estate are too high is one of those factors. So people are moving to places where their money, their dollar, can be stretched further. I don't blame them. What about this? America's factory building boom. You may have seen this already. I wanted to show you that and then show you something completely contradictory or more realistic. Construction spending on factories is soaring, due in no small part to two pieces of legislation. Now, this, I believe, is number one, bullish in a sense. This is talking about the CHIPS Act. So they're trying to manufacture semiconductors in the United States because, of course, everything that's been happening with China and so on. But, when we look at it, what's really going on? Are there actual, is production picking up? Well, what about this? Industrial production decreased in June in the US for a second month. Output dropped 0.5% in June for the second month. Production of consumer goods slumps the most since early 2021. That's the real data, the actual production. It doesn't matter if you're building factories, that's a good thing. Hopefully those come online. Hopefully they start to produce stuff. But right now, as it stands, the production is still looking weak and they need the growth. What does that tell you about what's going on in the economy? What does it tell you about the jobs, the real job situation? If this continues to go down, we're going to see that trend. I will bring that to you. Subscribe to the channel so I can give you the latest and greatest information and none of the fluff. That's what I do here. You don't want that fluff. Never going to be a good thing. What about this? Yellow, this company here, incredible to read this. It's ceasing regular operations, and you'll see that Yellow's demise is 2 decades in the making. A lot is going on right now in the shipping logistics industries. The biggest bankruptcy in US trucking history. That's the biggest. This is incredible. The nation's 3rd largest less than truckload carrier, Yellow Corp. I mean, they're gone. They're absolutely gone. And so if you're not aware of this, LTL, less than truckload, for all of my shipments, pretty much for the most part, when I'm shipping with inside of the United States, I will do, for instance, 3 pallets, send those 3 pallets, LTL, goes into Amazon. Now you have 4,000 units or what have you. Those move in through one of these trucking services. You get that, you pay the fees. Those fees over the last few years have been going up and up and up and up. And even though you increase the quantity, doesn't do much for the price. Okay, so the cost has been rising. In addition to that, you look at by the way, you're seeing this potentially as a deflationary event, right? They would say that. A lot of the YouTubers may say that. This is a deflationary event. We're watching these companies, they're going down, deflationary. But hang on for a second. While they absolutely could be a deflationary that signals weakness in the economy, there's something going on with if one of these companies are, not able to actually proceed, there's a problem, but it's more than that. We have a problem that, number one, the prices have been rising over the last while, and the customers are taking it. They're absolutely taking it. It doesn't matter if you add more quantity, still happening, okay? The next thing is that all of these, drivers, everybody that's working for the warehousing and everything, their salaries have been increasing. So wage inflation is clear and evident right here in this industry. If this company shuts down, you don't necessarily, as an Amazon seller, I can speak in this regard, that I still need to ship my products, but there's less available trucks, less available drivers. What does that do to the price? Well, it maybe doesn't skyrocket if we're, going down, this is deflating and so on. Well, at least it keeps these things at this level. So inflation is being baked into this cake long term. The data is not going to show it, but let's be honest. This is what's going on. I think it is truly extreme. I'm able to use my personal information, back that up with what I'm getting through. I love FreightWaves. This is something that a resource I use all the time, FreightWaves. They're talking about that. So I can compare that. I think it is very evident right now as to what's going on. And while you could see something as a deflation, oh my goodness, that's shocking, understand that the biggest threat is inflation. But deflation sounds scarier because people lose in the deflation and they want an opportunity to buy an asset for cheap. That's what it comes down to. Everyone would love that, except for those that have overextended themselves, and they know that. And that's the only scary part. Deflation is generally not a bad thing. Look, what's going on with commercial real estate is a huge problem. Huge problem. Just look at this. And by the way, residential is different factors, no question. But look, projected change in real estate demand 2019 to 2030. At the bottom of that, and the first one, this office real estate, is San Francisco, minus 20%. Shocking. That's crazy. Now you've got Houston and Beijing slightly above, just positive 2%, but all of them are down. Retail real estate, San Francisco and London on the top of the list. Terrible. You don't want to be in retail real estate. Even Fifth Avenue, like these nice places of New York, they've got a lot of empty real estate. What is that signal? But you look at residential real estate in some of these places. Okay, Houston off the charts, 26% increase. Residential real estate, oddly, Paris down and San Francisco down. But of course, it all depends on what the consumer is willing to take, right? Applies to anything. June's home sales dropped to the slowest pace in 14 years as short supply chokes the market. At the same time, people don't want to sell their properties. They're saying, where am I going to go? I'm not going to get another mortgage at 7% plus. No thanks. I think I'll stay put. That's just the way it goes, right? That's what we're seeing right now. Households earning $200,000 or more are flocking to these 10 states. 5 are in the South. So you can predict where these are, but you'll see for yourself. Florida, Texas, North Carolina, Arizona, South Carolina. You probably guessed that before I even went there. 1 in 4 home buyers want to move to a different city. Here's the number 1 place they're looking at. What do you think? What do you think it is? Look at it. Las Vegas. Cheap housing. No question. Affordability is there. Phoenix with, what is it, a month of over 110-degree weather. Tampa, Florida, Orlando, Florida, and so on. Okay. So we're seeing some very different things with real estate, and you even have this billionaire Sternlicht seeing a Category 5 hurricane spurred by the Fed's rate hikes. So in this interview clip that I saw, he essentially said, we got a big problem right now, big concerns for what's going on in commercial real estate, especially all the things that I've highlighted before. It has nothing to do with one guy predicting things or another. I showed you what's going on here, giving you both sides of it. Real estate, commercial real estate is the biggest weakness. That's the biggest weakness. I'm going to continue to bring that information to you because I think it's extremely important, even if you're not investing in it. But if you are, watch out. Do you have real estate investment trusts, REITs? Look into them and see if they have any exposure to this, specifically when you were looking at it, commercial real estate, but be careful about commercial, because multi-family residents are something that I think are still very accessible for a lot of people and necessary, but office and retail, not the case. Okay, so watch where the exposure is, and also it depends on the city, as you saw. That's why I showed you those charts. That's why this information is here, so that you can make the most informed choices. If you want some sort of, I need to know something, you got to let me know what it's all about, well then just tell me what you want to know, and I'm going to bring that to you. You could tell me either in the comment section below, I'll take that, but if you want to communicate to me directly, you can do so at Discord, so we can chat directly between us and all these like-minded. We are heading towards 1,000 like-minded individuals in a single group, all available for free. Discord, hit that link down below. I'll see you there. Take care.